Andrew, thank you so much for joining us here at IMpower. It's great to see you again. You're head of alternatives, and there has been a lot more attention in that space. Why is that, and why now?
Firstly, thank you for having me. I consider alternative investments to really be two distinct areas. Firstly is the private markets part of the alternatives world, and there's been a lot of developments in the past few years which has meant that a lot of the economic activity that we're trying to harness on behalf of our clients in terms of investment opportunities is in the private space. And if you limit yourself and your investment opportunities to public markets, you are excluding an awful lot of potential investment opportunities. The second part of the alternatives universe is areas such as infrastructure, real estate, commodities, and property. And in those scenarios, it's very much about creating opportunities that diversify your portfolio away from the traditional equity and bond elements of an investment strategy, which are crucial and probably will always form the majority of a client's investment portfolio. But it's important that you have those other alternative elements as well to provide diversification.
Diversification is obviously key in an economic environment like this. What does that look like, and how do you create portfolios that are robust in an environment like this?
Absolutely. So the very first thing you need to do is to have a central investment view and outlook, and you construct your portfolio that you hope will be optimal for the environment that you are expecting to materialize. But of course, you have to put in place mitigating strategies in case you are wrong. So if you think that inflation or growth is going to be higher than you expect or lower than you expect, what might you be able to have in place such that you would limit the chances of a difficult outcome in a situation where your central scenario is wrong? The first line of defense is always diversification, almost regardless of your economic view, because anyone can be wrong. So you always should be well diversified. But beyond that, it's very much about looking at specific risks that you think might exist but are unlikely to happen but possibly could happen, and have strategies in place to mitigate those situations.
You've mentioned private markets, that's your area of expertise. So what are the opportunities and limits there? Because obviously we're talking about quite a liquid market and it's quite different to the public market. So what does that offer, and do investors need to have a much longer term view, for example?
Yes. So at Investec, we've been investing in private markets for many, many years. The main way we've accessed that is through the investment company route. It's a particular type of investment vehicle that is liquid, and it is accessible to the average investor, the average retail investor. You don't need to have a lot of money or to be sophisticated to access those types of opportunities. And those kind of structures have and will continue to do a lot of the heavy lifting for us in terms of accessing private markets. But there are increasingly new structures available which, for certain types of clients, not for all clients, but certain types of clients, might provide a superior means of accessing those opportunities. They come with additional complexity and risk, and we're going to take our time in figuring out how to do that best for clients, but it is something that we are actively exploring.
So those are the very core investment opportunities. How much are you seeing a demand for, actually, I'm more concerned about what this investment is doing in terms of sustainability, in terms of impact? Is that a real theme as well that you're seeing even in this very tricky economic environment?
Increasingly, clients want to know that their investments are at the very least doing no obvious harm. And in many circumstances, they actually also want to know that their money is being put to good use and is actually creating a positive impact. Increasingly, it's becoming quite obvious that you don't have to choose between investing money in a way that is sustainable from an investment perspective and also does good for society, because it's increasingly clear that governments, regulators, other stakeholders are willing to pay providers of private capital, such as our clients, to actually provide the capital that will help solve a lot of the world's problems. So you can actually make good money for your clients in a relatively low risk way by investing in businesses or lending to businesses, providing capital to businesses that are having a positive impact on dealing with the pressing issues of today, such as climate change.
When you're asking investors to be adaptable and think differently in their approach to their investments, I guess you need to back that up with the teams in your own business that are walking the walk, if you like, that are innovative, adaptive. What sort of teams do you need and what expertise do you need within your businesses now to really succeed in this environment?
Absolutely. Diversity is absolutely key, and it's very easy for people to sort of say that and to pay lip service to it. But for me, and I think for Investec, it's really about diversity of thought and diversity of background. And it's about saying that we can best identify the investment opportunities that our clients need. We can best represent our clients, and we gain the most trust from our clients when we look like our client base. And our client base is diverse, as you would want and expect it to be. It reflects society. So I think that having a team with lots and lots of different nationalities, genders, backgrounds, education types, it means that everyone brings something different to the table. It reduces the chance of groupthink or following the herd. And I am convinced it is a key driver of long-term investment outperformance.
Good for the bottom line. Just finally, in the next 12 months, given everything we've talked about, where will your focus be directed?
So we will continue to provide the already pretty well organised range of alternative investments from our clients: private equity, private debt, infrastructure, real estate, and hedge funds. But we will continue to try and build out that offering to take advantage of new opportunities, both from a structuring and a regulatory perspective, but also as new investment opportunities come up.
There's always an adapting landscape out there, that's for sure, in this industry, isn't there? So good luck with navigating it over the next 12 months. Thanks so much for joining us. Good to talk to you.